Our guest today is none other than Raj Desoy, who is the CEO of BankOne. Raj, welcome.
Good afternoon.
BankOne is, as we know, one of the fastest growing local bank in Mauritius, and now having an appetite into Africa. Why the move in Africa?
This bank was an ailing bank, and we took over this bank in 2008, which is a joint venture between CL Group of Mauritius, one of the biggest business conglomerates in Mauritius, and I&M Bank. I&M Bank is the fourth largest bank in Kenya, having 19 branches. They have an asset size of nearly $1 billion and a profit after tax of around $60 million. They have among their shareholders DFIs like Proparco and DG. I&M Bank, to its credit, recently acquired two banks, one in Tanzania, which is now rebranded as I&M Tanzania, a previous CFU bank, which is another asset size of $120 million. And very recently, a bank called BCA Banque Commerciale Rwandaise, with 18 branches and $152 million of assets. So that gives, a good footprint of I&M Bank presence in Africa. So when we started this bank in 2008, I mean BankOne in Mauritius, we started it as a 50-50 joint venture between CL and I&M Bank. Of course, there was a huge potential at that time in the domestic segment because there was a large amount of rupee deposits lying on this bank, which we were able to profitably deploy and turn around the bank in a very quick and efficient manner. But Mauritius being Mauritius, with a limited geography and a limited population size, the room for growth is very limited. Especially, we've got around 21 banks in a small country like ours. So it is true that many of the banks which are here do not necessarily indulge into domestic banking. But for those who are there, like MCB, SBM, ourselves, and the other banks, the competition is very, very tough. A very cutthroat, price wars, fees wars, price wars, pressures from the local population, pressure from the central bank, and the scope of growth is very limited. So you're bound to look, I would say, westward. For us, east is too far away. The only way we could look is west. Look west and look at neighboring countries like Madagascar in the Indian Ocean, Seychelles, probably Réunion Island, Mayotte, Maldives, Comoros, and further down, look at Africa. The future of Mauritius lies into Africa as an hinterland. There's no two ways about it. And it is good that our deciders, our political leaders, have realized that except with the help of the hinterland in Africa, the potential for Mauritius growth would be very, very constrained. The intention was to make this bank become an international bank, in the sense that, yes, we would look at a small portion of our domestic asset, but mostly focusing into Africa. Now, that poses a second problem, is that I&M Bank itself is already in Africa, and as I explained earlier, they will be expanding into their part of Africa, which is Kenya, Rwanda, Uganda, Democratic Republic of Congo, probably Ethiopia or Sudan, all this part of Eastern Africa. While BankOne will be looking more towards Southern Africa, which means Madagascar, South Africa, Botswana, Zambia, Mozambique, and these are key countries where BankOne is looking at. We need not say the potential for Africa is immense. We know that there is a large amount of unbanked population. We know that today you have loan sharks which are skinning off people at huge, humongous interest rates. And there's a need for good commercial banking coming into Africa. So for us, the strategy has been cleared from 2008. We need to be moving quickly into Africa before the others get ahead of us.
So we can see, Raj, that you already got a foothold on the Lion continent. And we've also seen locally this sector, the financial sector, and more specifically the banking sector, has been growing above 5% a year. And now government sees that as a pillar of the economy, not just for the domestic market, but also to expand into Africa. In your views, how can we see, and how can you see government, what are the things that government has to do to make sure that we become a financial hub, as mentioned in so many speeches by government, that they want to make Mauritius a financial hub? In your views, what are the ingredients that we need to make it happen?
No, first of all, I'd like to mention that going into Africa is a business decision. And as business people, I would say that government can only be there, or the political leaders can only be there as a facilitator. We should not expect more than this. And it's a commercial decision that economic players have to take into account. But as a facilitator, the government could create an environment which become conducive for people to invest. First of all, we have already nearly 40 or more double taxation agreements with Africa, which is a plus in itself. Secondly, there may be some meeting that the government could facilitate exchanges between chambers of commerce, which could be arranged. And I would not speak of any subsidy because I don't believe in subsidy. I believe businesses have to stand on their own. But facilitating meetings, facilitating market meetings, and creating more dynamics, DTAs, is what the government should be doing.
With the financial crisis in Europe and the difficulty now with all the issues to do with India, we've also seen there's an influx now of investment into Africa, whether it's infrastructure, whether it's building of roads, dams, even in the financial sector. How can investors, potential investors, see Mauritius as a platform to build, for example, private equity, to build a special vehicle into Africa? In your views, can you see somewhere, somehow, there should be that platform where we could be the Luxembourg of Europe, for example?
Yeah, absolutely. I think there's a huge infrastructure deficit in Africa. I think we don't need to fly high to see that. Dams, as you said, roads, harbors, ports. A huge amount of infrastructure deficit which has to be made good in a very short span of time, which needs huge amount of capital, and capital has to be raised from various countries. I think the advantage that Mauritius poses is that Mauritius is considered within Africa as the best financial center with the most consistent legislation, which gives a lot of credibility to investors as a financial center. We believe that Mauritius could be what Singapore has been to China initially, or what Luxembourg has been to Europe, or what the British Isles have been to UK and elsewhere. Mauritius, with its solid law and good governance, could become a financial center where enterprises or government could raise money through Mauritius because of its credibility and its rating in the world. That's, for me, is a big opportunity both for Mauritius and for African countries in the region.
And we always hear the usual cliche, Africa comes with risks. And if you were to look at the risk that the bank should be avoiding when they want to go into Africa, what are these risks you can elaborate on?
Yeah, I think, there's no business without risk, because if there was no risk, there would have been any business. We'd be all sitting homes with plenty of cash and going around with leisurely. I think if we want to do business, we have to understand the risk and know how to manage the risk. First of all, people talk about a lot of corruption into Africa, malpractices, and I think these are things that will change over time. We believe that as good governances, practices get into the culture of African business, these political and corruption offshoot will die down, as it happened in many countries. Likely to persist for some time, but I believe we need to be driving at good practices wherever we go. And over time, let's say if we have 5-10 years, this will die down to much less extent than what we are today. That's first thing. The corruption is what really scares people as soon as you walk into Africa. The second thing that scares people is the political risk. The risk of revolution, the risk of change in government, the risk of coup d'etat. And as businesses, we are very worried of misappropriation, for example, and repossession by the government. So these are things that make people scared. But I think the African leaders now have come to understand that if they play that kind of game, then people will shun away from the markets, and they are the people to lose. When you talk about economic growth and when you talk about future growth, it's only foreign investment that really is one way of a sustainable development. When we talk about sustainable development, there's no African country or even Mauritius on its own, out of its own generation of surplus, can sustain the amount of deficit, capital deficit or capital expenditure deficit that is rampant in this country. You will need FDI. You will definitely need FDI to get to sustainable growth. And for you to get FDI, you have to be stable. You have to give confidence to the investors. If they play their nasty games of political coup d'etat or upheavals, people will shun away and go to rivaling countries. There's not one choice in Africa. There's probably 44 choices. And if one country is trying to play gimmicky, I'm sure then his neighbor will be benefiting. So as people get more mature, as leaders get more mature, this game plan would change, in my view. But it's a question of patience. I mean, those who are going to be there first, who are going to be there first, are going to reap the benefit first. So if you're going to compare, let's take a country like, for example, Zimbabwe. Zimbabwe today is a country where you would want to put your foot down. There are certain enterprises who have taken the risk and ventured there, waiting for things to clear up and then benefit. So it depends on the risk appetite of different enterprises. We should not be scared by these risks. We need to understand those risks and manage those risks, and help to make this risk become more mitigated as we go down the road. I don't think people are worried about the risk too much now as things get clearer down the road.
And with risk, as bankers, you know, comes opportunities. If you look at the domestically, in Mauritius we've seen we have a very mature banking market. Competition somehow is rife. We are now having above 20 banks. Only recently, last couple of months, we had another bank that has joined the landscape. What has been the success despite a young bank? What has been the success, and what are the plans for BankOne going forward in the local market?
Yeah, I think the first success factor has been understanding the market. You know, when we took over the bank, we brought in a team which was very well tuned with the different market segments. So we brought in a team who knew the retail market, who knew the corporate market, and this is where it helped to deploy the excess rupee fund that we had. Now we also brought in a team which knew a little bit about international banking, and we started international banking in 2008, which is focusing on raising deposits from outside Mauritius and lending to outside Mauritius. Within 5 years, I can tell you that international banking now contributes around 45% of our profit and 45% of our balance sheet. And we believe that in years to come, it should be going more towards 65–70% rather than 40–45%. So it's the knowledge of the market, first of all, which has helped. Secondly, it's about looking at opportunities, effectively smelling those opportunities and going quickly. As a small bank, I think what has helped is the speed of response, or the speed to take decision. Between me and the clerk, which is at the counter, there's only 3 layers. So by the time there's a decision need to be made, it comes to me within an hour, and the decision is made. And I have a board which gives the management enough freedom to decide quickly. We have enough freedom of action so that things are decided quickly. I think the speed of response has been, as a small, agile bank, has been what has also helped in getting this bank back on track and progressing as you said.
Thank you, Raj. In short, we can see how having the right strategy, having customer centricity, and also having the speed can make a success to anyone. And we thank you.
Thank you very much.